CNBC TV 18, celebrating 16 years of business leadership.
A new year, renewed fears. Stocks in China crashed 7% the first trading day of 2016, triggering circuit breakers and a halt in trade. Global markets rattled as factory activity in China shrinks for the 10th straight month.
Bulls run for cover on Dalal Street as the fear factor returns. Major indices tank 2%, the biggest single-day fall in 4 months. The rupee tumbles the most in 9 weeks against the dollar.
Crude prices rise as tension escalate in the Middle East after Saudi Arabia, Bahrain and UAE as well as Sudan severed diplomatic ties. This after the Saudi embassy in Tehran came under attack after the execution of a Shia cleric by the Saudis.
Nearly 3 days after the operation began, fresh gunfire heard at the Pathankot air base. The army confirms 5 terrorists have been killed. Preliminary investigation suggests 2 groups of militants may have entered the airbase.
9 people are dead and hundreds injured after a 6.7 magnitude earthquake rocks Manipur on Sunday. Strong aftershocks felt across northeast India today.
A watershed moment for Indian cricket. Justice Lodha panel proposes sweeping changes to the cricket administration. Wants netas to be kept out of BCCI and bring the board under the RTI. Also proposes to legalize betting.
Wipro names Abid Ali Nimutwala as its new CEO beginning February. TK Kurian elevated as executive vice chairman.
Not the first time that there is a regulation or a Supreme Court order that is adverse for Mahindra. We have risen above it and we will do it again.
M&M's Pawan Goenka says he's not losing sleep over the Supreme Court order banning large diesel vehicles in the National Capital Region. This on a day when top 3 car makers moved the apex court to appeal against the diesel ban.
Delhi government passes the odd-even acid test. Metros managed the massive rush and 500 people were slapped with fines.
We are opposed to the idea of differential pricing for a limited set of services, either directly by a telecom service provider, as in the case of Airtel Zero, or through a partner.
Net neutrality is a national priority, says IT industry body NASSCOM. Writes to TRAI opposing free basics and differential data tariffs.
जो बंदा एक बार मरने के लिए आया है सोच के ठान के, उसको रोकने के लिए ऐसे सैक्रिफाइस हमें देने पड़ेंगे।
तुम्हारा ये बलिदान याद रहेगा हिंदुस्तान।
Helpless fathers, grieving widows and little children waiting for their fathers. 7 army men laid down their lives at Pathankot when the army base came under terrorist attack. We pay our tributes to India's heroes. Good evening and thanks for joining us in India Business Hour. I'm Nayantara Rai. Surbhi Upadhyay joining us from the Mumbai studio. Surbhi, what a terrible start to 2016, whether you look at Pathankot, the earthquake, or even the global carnage in the equity markets.
Absolutely, but the loss, the human loss that we've felt here in this country, Nayantara, over the last 2 days, I think that, of course, really is paramount, well above what we're talking about, the loss in the market. But nevertheless, the We will be getting you that ground report from Pathankot in just a bit. The big top story, the business story tonight, of course, is the great fall of China. So let's get you more on it. The new year has sparked renewed fears about the underlying weakness in the world's second largest economy. Stocks in Shanghai plunged nearly 7% in the first trading session of 2016. This triggered circuit breakers imposed by the regulator to curb volatility. This forced stock markets to suspend trading temporarily. The fall in China rattled markets across Asia and the world. So what triggered this sudden collapse? The Market Purchasing Managers Index showed that factory activity in December contracted for the 10th straight month. Now, India was not immune to the China rout. Major indices here tanked over 2%, marking the biggest fall in 4 months in terms of percentage. We, of course, earlier had Shireen in conversation with Anuj and Sonia to talk about this big fear factor that's coming in from China. Here's a slice from that conversation.
Anuj and Sonia, thanks very much, guys. It's not turning out to be a very happy new year for global equity markets. But Anuj, to you first, did anyone see this coming? Of course, we've been talking about the China factor, and it now seems to be the case that this is the big concern when we talk about global equities.
Well, Shireen, no one saw this coming clearly, and in equity markets, of course, it's always tough to predict something like this. But what we can say is that today actually marked the return of the fear factor. No one could have thought that first day of New Year, and that this technically was the first day of New Year. What we had on Friday was a bit of a farce. But for global equities, this was the first day of New Year, and we saw the fear factor make a big comeback in trade. We have seen this in the past. The China market is down 5-6%. But what really spooked sentiment further was the kind of decline that, that was there for other developed markets, something like Nikkei, which was down 3%. We had the European markets, when we were trading, they were down 2 to 3%. And when we were trading, the Dow futures were indicating a 300 to 400 point downtick. So yes, China was a problem, but the bigger problem was that equities across the world were seeing this as a big scare and a big fear factor. A fear factor which was missing in the stock market all through the month of December, which made a big comeback in today's trade. In fact, if you take a look at what happened today, we saw the Nifty and Sensex reversing 2 weeks gains in just one flat trading session. The cash and F&O volumes were extremely high, way higher than even the expiry level volumes. We saw aggressive build-up. We saw the India Volatility Index surging about 12-13%. Huge build-up at 7,400, 7,500, 7,600 puts, and put premiums doubling or trebling. So again, a short point, the return of fear factor, as we are calling it. The big question is, will we get away with a decline today and move on from 7,800? Well, the big answer to that would lie in what happens to the rest of the emerging markets tomorrow onwards, because today clearly was a big scare.
Absolutely, it was a big scare. Before I come to you, Sonia, and talk about individual stock performance, Anuj, a quick question to you, because, you guys have been talking to experts through the day today. What are they telling you, both as far as the technicals are concerned and more from a fundamental story? At this point in time, are they saying, wait and watch, let's see how this plays itself out, or is this really a good opportunity to use the correction to enter?
Well, Shireen, one thing which is constant is that only the year has changed. The market dynamics haven't changed. All through last year, we saw this kind of trend on the Nifty and the Sensex. They kept making lower levels while, individual stocks did well. And the consensus right now here is that all corrections should be used to buy individual stocks, but don't get fixated by the Nifty and Sensex levels. The Nifty and Sensex levels won't tell you the true picture. The true picture will be seen in the mid caps. And again, the worry for the market would be that if the Nifty has to go back and break 7,500, would there be damage in the mid caps as well? That, I think, is a much bigger risk than the Nifty itself going back to the previous low. The Nifty can go to 7,500 and you can be still fine. But what if the Nifty goes to 7,200 or 7,000, as a lot of people are now calling? In that case, you will see a concurrent damage in the mid caps as well. And you've seen a lot of money flows from domestic institutional investors via mutual fund, via LIC schemes in some of these mid caps. That is a bigger risk, but that's something that we don't want to talk about today, because today could well be just a one-off.
Absolutely, and let's hope that that is indeed the case. But Sonia, to you, as Anuj was pointing out, the headline on the index level may not tell us the entire story, but let's talk about individual stocks. I know stocks like Tata Motors under pressure on the back of the China factor, but some stocks moved positively in trade on the back of fundamental news. IRB, Infra, Punj, Lloyd, where order wins have come their way. But what else caught your eye in terms of individual stock performance?
Well, Shireen, the biggest disappointment today was the fact that we closed at the lowest point of trade trade and with very high volumes, and it was a secular run on the downside. So we saw a lot of heavyweights put pressure on the markets today, whether it was HDFC, whether it was ICICI Bank, Infosys, Reliance. You slice through every sector and you get a top loser in trade. That's not a good sign. Also, in terms of individual pockets, PSU banks cracked really hard. Bank of Baroda, PNB, SBI were big losers today. In fact, PNB hit a fresh 52-week low, and from the capital goods space, L&T was another stock that hit a fresh 52-week low. L&T has now lost more than 30% in just 6 months. That's the ferocity of the sell-off that we've seen over the last few weeks and months. Tata Motors, as you rightly pointed out, cracked post the weakness in China. As we know, 15% of Tata Motors JLR sales comes from China, and even telecom stocks were not spared. So Bharti, Idea, all of them were under pressure. A couple of the mid-cap losers were names like Shree Infrastructure, Relcom, IFCI, IDBI Bank, and remember, many of these stocks have been big gainers in the last fortnight or so. So there's some rapid unwinding that's coming through over there. Adani Power as well can be featured in that list. There were some gainers as well. On the gaining list, you saw Ashok Leyland because of strong CV sales. Jacob did quite well because the centre gave a nod for the Mumbai Trans-Harbour Link. IRB Infra Punj Lloyd on the back of orders that they won. And a couple of stocks like Torrent Power hit fresh 52-week high. And on a lighter note, Shireen, GM Breweries hit a fresh 52-week high as well. As Anuj and me were discussing, I think after today's sell-off, one would need to resort to some of these Indian alcohol companies.
So maybe that's going to be the stock to watch out for in trade. But guys, thanks very much for joining us from the market desk.
So that's the conversation Shireen had with Sonia as well as Anuj. I don't know if Sonia and Anuj are right now drinking Indian alcohol or not. But let's talk about the currency markets now. The Indian currency lost sharply on the back of the Chinese rout and tension in the Middle East, which we'll talk about just a bit. We should point out the Indian currency wasn't alone. We saw most emerging market currencies sell off quite sharply. 66.61 is how the rupee closed against the greenback currency. Global markets certainly feeling the heat thanks to China. Stocks in Wall Street as we speak getting walloped. Landon Dowdy now joining us live from the CNBC headquarters in New Jersey. I wish I could say Happy New Year to you, but right now, Landon, what we're seeing is absolute panic selling.
You're exactly right. Good morning to you. That's not exactly the way you want to start off a new year, and we're off to a rough start on Wall Street. Markets down across the board. The Dow, S&P, and NASDAQ all down more than 2% here shortly after the open, and that's being sparked by China, where stocks were halted after they fell 7%, the biggest drop ever on the first trading day of the year. Analysts pointing to a report this weekend showing weakness in China's manufacturing sector for a 10th straight month. Other Asian markets falling in response. Europe's in the red. Germany slumping about 4%. We're also keeping an eye on oil here today with growing tensions between Saudi Arabia and Iran. Saudi Arabia severing diplomatic ties with Iran over the weekend, but investors really keeping an eye on the slowdown in China, the world's second largest economy, which had until recent years been growing at a blistering pace. And you know, you could say that when China sneezes, the rest of the world catches a cold, and I think that's what we're seeing here today. Back over to you.
All right, thank you so much for that update. Now, what's the road ahead for China and what impact will this have on Indian equities in general? Here are some experts, and opinion seems to be fairly divided.
Markets will be volatile, they'll go up and down, but whatever is happening in China, whatever is happening in rest of the emerging market, in some sense is positive for India over medium to long term. The Chinese slowdown will lower the commodity prices even more. We are net importer of commodities, so eventually we will benefit from this correction. If we see the oil price correction itself, we would have probably saved about $70 to $80 billion from the top of the oil price correction.
The China event, to my mind, is underappreciated by the markets. And I don't know whether it plays out in the first half or whether it plays out in the second half. But in 2016, if we have to watch for one biggest event, it is the China event. And I would be watching it very, very carefully. Even a mild hard landing were to happen in China, I would think it will be a major event to watch in 2016.
I think that further deceleration is due, but further deceleration is going to be probably backstopped and mitigated by additional easing measures. So no hard landing story coming up in China in 2016, but probably more downside to expect from growth side, and a bit more cautious approach still about the equity markets as well.
So there you go, those experts' take on where China is headed and what the impact of China is going to be on the global equity markets. So you've seen equity markets come under immense pressure today, but guess what? That's not the case as far as commodities go. Here's the reason. The standoff between Saudi Arabia and Iran post the execution of a prominent Shia Muslim cleric reached a tipping point last evening after Saudi Arabia severing its diplomatic ties with Iran. A number of Saudi Arabia's allies have now joined in that diplomatic action against Tehran. So you have Bahrain and Sudan both severing relations with Iran. The UAE, meanwhile, has decided to downgrade its diplomatic ties, and all this having an impact on crude prices. We've been seeing that through the day when we saw the crude futures, and right now you have both the Brent and the NYMEX gaining, posting some healthy gains. Brent at 38.54 cents to a barrel, whereas NYMEX at 37.63 to a barrel. Here's Ali Rouzi of NBC News. He filed this report earlier.
Iranians are very, very upset about it. The Iranians see themselves as the vanguard of Shias in this region. They extol the fact that they want to protect all Shias here. They said Sheikh Nimr al-Nimr was fighting for the rights of Shias in Saudi Arabia, and his execution was a human rights travesty as well as un-Islamic. So they're very, very unhappy about it here. The supreme leader of Iran, the highest authority here, said that the Saudis will face divine retribution for this execution, and the execution of this, what he named a martyr, he said, would speed up the demise of the fall of the House of Al Saud. So some very sharp words from the Iranians. Now, the Iranian President Hassan Rouhani also strongly condemned the execution, but he had a more balanced statement saying that there by no means it was justifiable raiding the Saudi embassy. He goes, the Iranian government has a duty to protect all of its diplomatic missions here, and he's asked his interior minister to bring to justice the attackers of the embassy. Now, whether those arrests will turn into convictions is a different matter, but President Rouhani trying to give a more balanced reaction to this. But the hardliners in the country are furious about this. Another foreign minister here said that the Saudis have done this intentionally to exacerbate tensions with Iran. He goes, they didn't need to cut off diplomatic relations, but they wanted to make things worse with this country. So I only see things spiraling worse here between Iran and Saudi Arabia.
And all of that geopolitical talk and tension actually providing some support to crude oil prices today. But the big corporate story, it's the second such change at Wipro. The country's fourth largest IT major has elevated TK Kurian to the post of vice chairman, and current COO Abid Ali Nimuchwala will be replacing him as the CEO's office. Kritika Saxena is here with more details. Kritika, Nimuchwala was the obvious contender perhaps, and this has been speculated right from the day he was appointed. So will this change operational strategy at Wipro in some way?
Well, as you said, in 2011, TK Kurian took over the reins of Wipro as CEO, and at that point he was taking over from two joint CEOs, Girish Paranjpe and Suresh Vaswani. So it was predicted that yes, this will be a very important, crucial change when his term expires. His 5-year term is coming to an end by the end of this month. But TK Kurian's strategy as far as his tuck-in acquisition, as far as his organic growth and streamlining operations is concerned, seem to be working. Yes, but they really haven't brought in a turnaround. So that could be the reason why he has been elevated to the vice chairman position, and Abid Ali Nimuchwala, who had been appointed in April 2015 as the group president and COO, will be taking over the reins. Now, it was speculated when he was appointed itself that he will be taking over, and hence he was being groomed in the last 9 months to take over the reins. If you look at the overall functioning that the man had done at Wipro so far, he was taking care of global infrastructure services, business
business application, BPO, advanced technology solutions, which are almost 60 to 70% of the broad businesses that Wipro deals with. And over and above that, he was taking care of and was broadly responsible for business operations, strategic engagements, advisor relationships, and strategic marketing. And despite being the COO, he was already reporting to Azim Premji. So he was being groomed for this. And remember, Earl, before joining Wipro, he was responsible for taking TCS's BPO operations to the $1 billion plus mark. So he has been spearheading several areas, and he could probably be the most obvious contender at this point in time. All in all, there won't be a very major change as far as the operational strategy is concerned, given that this was expected. So you could expect the market to either not react at all or react positively.
Thanks, Akatika, for joining us. With us is a big change of guard at Wipro. Nearly 3 weeks after the Supreme Court banned the sale of 2000cc plus diesel vehicles in the entire national capital region, the big boys have decided to go and seek legal recourse. Toyota, M&M and Mercedes have all moved the Supreme Court early in the day, challenging that very ban. The Supreme Court is going to hear their plea tomorrow. Ahead of that crucial day in the Supreme Court, Ranjay Banerjee caught up with M&M's Pawan Goenka on why exactly the company thinks it's a wise move to appeal against a Supreme Court verdict.
Not the first time that there is a regulation or a Supreme Court order that is adverse for Mahindra. We have risen above it and we'll do it again. So we'll find a solution. I'm not going to lose sleep over it.
You have, in fact, just today itself, along with Toyota, Mercedes-Benz, Tata Motors, you've come together and you filed a plea in the Supreme Court. What's your concern, sir, that you're trying to essentially bring to light the fact that by doing this, pollution, which is the main reason for banning diesel vehicles, will not be, that motive, that goal will not be achieved?
Well, we will present our arguments tomorrow in the court, and basically we are going to talk about facts as we see it based on published data. As I've said in the past, that clearly the pollution level in Delhi is an alarming situation. Clearly something has to be done, and clearly this will not happen without pain. Everybody will have to sustain some pain in doing so. All that we want to make sure is that the Honorable Supreme Court has all the facts in front of them before they go beyond the interim order and decide what is a longer-term solution for the air quality in Mumbai and in Delhi.
So as a manufacturer, sir, I mean, what does it do in terms of your planning, investment portfolio? And how concerned are you in terms of, how one, order can sort of do away with the previous orders that they may have been?
Supreme Court at that time directed that the BS2 emission norms should come in very, very rapidly, within 1 year from the date into Delhi. And that obviously helped to speed up the emission norms coming into India. And we have gone on that pace quite well, from BS2 to BS3 to BS4. Unfortunately, things got stuck in BS4.
So it's a very challenging phase for the auto industry. It's being vilified, being seen almost as a villain by many of the NGOs. You would have seen some of the arguments saying it's the auto industry that is responsible for the delay in the implementation of the BS4 and 5 norms, which we know it's because of the availability of fuel. But what can the auto industry do? So what is your solution then to this problem?
So again, like you have said, that it's very convenient to put all the sort of responsibility on the auto industry. And I personally consider, and of course I'm biased, and therefore whatever I say will be sort of taken down.
A pinch of salt, a handful of salt.
And I'm biased, undoubtedly. But again, the facts speak for themselves. Auto industry has never shied away from bringing in new technology, never shied away from trying to do whatever we need to do, and sometimes even unreasonable timelines.
The 99 judgment, in a sense, was always been overturned now, because this will become the law of the land. Has that in any way, sir, impacted your future investment plans?
We clearly are going to have a gasoline portfolio. We have been predominantly diesel because that's what the customers want. But we will have a gasoline portfolio with KUV 100 that we have announced already. We'll be launching it next week. We have a gasoline and a diesel running parallelly, and we are working on other gasoline options for our larger vehicles such as Scorpio and XUV, and that will come. So from 2 years from now, for us, gasoline and diesel is a non-issue as a manufacturer.
Okay.
If customers want gasoline, they can have gasoline. If they want diesel,
fair to assume then, Dr. Goenka, that going forward, all your future models will come now in a petrol option.
Going forward, that will definitely happen. That will definitely happen because, see, globally, if you look at it, there is an equal demand for gasoline and diesel. India has been predominantly diesel for SUVs, and therefore we are predominantly diesel because we are catering to a customer's requirement and we are meeting the law of the land. So we are doing that. Now suddenly if we have to stop making certain kinds of vehicles, it has a negative impact because overnight if we have to stop doing it, we have a plant running, we have investment, we have employees, all of those things are there. But even there I'm saying that if that solves the pollution problem in Delhi, yes, I'm willing to take that pain.
Right.
But if we take that pain and we don't solve any problem, then I'm concerned that we are probably barking up the wrong tree.
Well, let's see if the Supreme Court is willing to listen to the three automakers. It's potentially a watershed moment for Indian cricket. The three-member panel headed by former Chief Justice of India, Justice Lodha, was formed after numerous scandals in the IPL. It has proposed sweeping changes to cricket administration. Here are the top recommendations. First up, no minister or government servant should be an office bearer in the BCCI. All politicians should be kept out of state associations. Essentially, a blanket ban on netas from cricket administration, though we should point out, as of now, there is no neta in the BCCI. Second, the BCCI should be brought under the Right to Information Act as it has a duty towards the public. That should make it more accountable. Third, impose a 70-year age limit on office bearers. No one should be given consecutive terms or made life members. We're going to tell you in a bit who all that is going to impact. Fourth, the panel wants two different governing bodies for the BCCI as well as the IPL, and that's in a bid to give muscle to players. The panel wants a players' association. Fifth, the panel wants only former international cricketers and also test cricketers to be a part of the team selection committee. Finally, this panel has proposed to legalize betting. This panel, led by the former Chief Justice of India, has also given a clean chit to the former IPL COO Sundar Raman. Here's more and reactions that have been pouring in through the day.
There are some issues which there may be two opinions, and that depends on the BCCI. Some of the measures the BCCI has already implemented again under Mr. Shashank Manohar. But the most significant thing is Players Association. Till now the players had no voice in running of the BCCI, and they were the most important element.
Remember the sports bill which I was trying to bring about, which I introduced in the cabinet also as sports minister, said all such things. And the best thing is that the Justice Lodha committee also has recommended BCCI to come under the RTI. And this is something which should be welcomed the most because it will bring in transparency. The age limit for the office bearers also is a welcome step. The tenure limit for the office bearers also is a welcome step. And more participation of players in the administration of cricket is something which should be welcomed the most.
So the reactions that have been coming in through the day. Now, if these recommendations of the Lodha panel are accepted, what is going to be the impact on the existing office bearers, people that are considered to be veterans in the BCCI? So here's our analysis. When you look at that age cap of 70 years, it virtually seals the deal for Sharad Pawar. He's 75. If this recommendation goes through, that means Sharad Pawar's dreams of returning to the BCCI are shattered. Sor N. Srinivasan, he's 71 plus. Wanting to make a comeback, it may not be possible. Niranjan Shah, he may also be outside of the BCCI and unable to do so if that 70-year age cap does come into force. Then look at the second recommendation. One man, one post. You do have cases right now where multiple people are holding multiple posts. For example, Anurag Thakur. He's the BCCI secretary. He's also the president of the Himachal Pradesh Cricket Association. I think it will be a no-brainer that he'll want to give up the Cricket Association post. Saurav Ganguly, the former captain, and my caveat, my personal favorite, he's the president of the Cricket Association of Bengal, the IPL Governing Council member, and the chairman of the BCCI Technical Committee. Which one is Saurav Ganguly going to be willing to give up? Rajiv Shukla, he's the BCCI vice president, as well as the chairman of the IPL Governing Council. Is going to be a difficult one for him, which one to give up. And remember, the IPL's powers are also being diluted by what the Lodha panel has recommended. So that's as far as that recommendation goes. Then you look at a BCCI officer bearer can have maximum 3 terms of 3 years each, and with a cooling off period. Once again, guess who's impacted? Anurag Thakur. He may not be able to contest to become the next BCCI president if this rule also comes into force. Shashank Manohar, his innings at the BCCI may just end. He's the current BCCI president. He's been around for 6 years. So these are the people that will be impacted. And if you read between the lines, you will see a theme of the people that I just pointed out to, how they are impacted far more than others. But of course, it is expected that the BCCI is going to appeal against all of these recommendations. I would suspect so. It would be the biggest one being the age one.
Well, it's definitely quite a story, and let's see how these recommendations actually play out, if they actually end up being implemented.
CNBC TV 18, celebrating 16 years of business leadership.